Now, this is it. IPSAS 13, lease. What is it all about? The aim of this standard is formulated to prescribe the lease, the lessee and lessor, the appropriate account policy and disclose to apply in relation to finance and operating lease. Now, let's look at it. Lease is an agreement between two parties, which we call the lessee and lessor. The agreement between two parties, the lessee and lessor. The owner of the party is supposed to be the what? The lessor. While the lessee is the person to lease the property to be used for a while and is meant to be paid a certain amount of money. Now, on that note, there are things we need to have understanding of when it comes to this particular what? This agreement. Now, as a result of that, let's look at the terms of what? The definitions of terms relating to this particular what? IPSAS. A, we have what we call commencement of lease term. This is the date from which the lessee is entitled to exercise his right to use the lease property. Or they can also call it what? Lease period. They don't call it what? The commencement of the lease term. They can call it lease period. It is the date of initial recognition of the lease. That is the recognition of the lease as appropriate. That is the date starting from that period when that particular thing is started to where it's meant to end. Then we also have what we call contingency rent. This is the portion of the lease payment that is not fixed in amount, but it is based on the future amount of factor that change other than the passage of time. The percentage of the future sales, the amount of future sales, future prices, and future market rates, depending on what it refers to as what the future changes that is meant to occur. Now, aside that, we also have what we call finance lease. Is different from the what? Operating lease. The finance, basically we have two types of lease. We have what we call finance lease and we have what we call operating lease. But finance lease, this is the lease that transfers substantially all the risk and the reward incremental to the owner of the what? Of the asset. The title may not eventually be transferred. Looking at it from another hand, we have what we call gross investment. The aggregate of one, the minimum lease payment receivable by the lessor under the finance lease, and any further ungranted residual value accrued to the lessor. Now, what we're looking at is that there are things that are meant to change. There are things that are meant to guide you on what you are doing as lessee and what the lessor. Are you with me? Now, when we now look at it in that direction, the lessee and the lessor, the role they are meant to play in that process. Do you understand? Looking at it from here, for a lease, the part of the residual value, what do you mean by that residual value? That's part of the lease agreement that is not subjected to what? To depreciation, granted by the lessee or by a party relating to the lessee. In a scenario whereby lessee is leaving part of their property out to the other person, the amount of the guarantee being the amount that could in any event becoming payable in the future, not now. for a lessor, that part of the residual that is what guaranteed by the lessee or by the third party unrelated to the lessor that financially capable of discharging the obligation under the guarantee. All these are just referred to as when you look at part of that particular property that will not be substantial or sublet out, or part of the property that can be sublet out, that it's not subject to what to the so that is a residual. The inspection of the lease. This is earlier of the date of the lease agreement and the date of the commencement by the party to the principal provision of the lease. At that date, one, a lease is classified as either operating lease or finance lease. What is the operating lease? What is the finance lease? You need to look at it one after the other. In the case of finance lease, the amount to be recognized as the commencement of the lease term are determined. We have what we call initial direct costs, are incremental costs that are directly attributable to the negotiation and arranging a lease, except for the costs incurred by the manufacturer or the trade. What we're looking at here, there are costs that are related, that are initially meant to be incurred when it comes to what finance lease, in terms of the what agreement in between the lessee and lessor. Now, under this, we have what we call the minimum lease payment, the unguaranteed residual to be equal to the sum of the fair value of the lease asset, any initial direct costs. Now, when we say initial direct costs, there are costs such as all these agency agreement, commission, all those ones, they are direct costs relating to that particular one, the lease process. Now, looking at it from the C part, a lease is an arrangement whereby the lessee conveys to the lessor conveys to the lessee in return of a payment or series of payments the right to use an asset for an agreed period of time. That is, we are looking at it as the arrangement between two parties, in which one party is looking at it that I'm ready to leave my property for you. You can use it for a while, for a particular period, based on the agreement, and which you are subject to make a payment for that particular arrangement. The lease term, it is not cancelable period, telling you that when you have a lease agreement and it has a period, that lease cannot be cancelled. You can't cancel it. For which the lessee has contracted to the lessee property together with any further terms which the lease has been the option to continue the lease the property with or without further payments. At any extension of the lease, it is reasonably certain that the lessee will exercise the option. The lessee's incremental borrowing rate of interest is the rate of interest the lessee will have to pay on a similar lease. The interest indirectly here, we need to have understanding that in the lease agreement, we have what we call the principal, we have what we call the payment, and that payment you are making, we call it what lease payment, is of two sides. We have the principal and the interest. The addition of the principal and the interest is what make up what we call the lease payment. Now, if you now look at it here, It said the lessee's incremental borrowing rate of interest is the rate of interest the lessee will have to pay on a similar lease, or if that is not determinable, the rate that at the inception of the lease, the lessee will incur to borrow over a similar terms and the similar security the fund necessary to purchase the assets. If at the end of the agreement term under the finance lease, the lessee, the ownership of the property will be transferred under that part, which is different from the what operating lease. The ownership is not transferable under the operating lease. The minimum lease payment. What do we mean by minimum lease payment? The payment over the lease term that the lessee is or can be required to make, excluding the contingency rent. Cost of service, where appropriate, tax to be paid by reimbursed to the lessor, together with one. For a lease, any amount guaranteed by the lessee or party related to the lessee, or for a lessor, any residual guaranteed by lessor by the lease. A party relating to the lease or an inception, an independent third party unrelated to the lessor that is financially capable of discharging the obligation under the agreement. Now looking at it, we need to know whether the lease is meant to be cancelled or is not meant to be cancelled. But under finance lease, nobody has that right to cancel the agreement. However, if the lessee has an option to purchase the asset at a price that is expected to be sufficiently lower than the fair value at the date of option, becoming exercisable for it to be reasonably certain the inception of the lease, the option will be exercised. The minimum lease payment comprised of the minimum payment required to exercise based on the lease agreement. Now, net investment in lease. What do we mean by net investment in lease? This is the gross investment in the lease discounted at the interest rate implicitly in the lease. Now, what are we talking about? That particular amount that you have as what gross investment in the lease, that is, you are meant to earn it in the future. We can look at it, what will be the present by discounting at the interest rate. Looking at it that, okay, when you discount it, you look at it, what is the present value of that particular investment now. Discounting means what? You are looking at the present value of the investment. Non-cancelled lease is a lease that is cancelled only one upon the occurrence of some remote contingency. That is, there are changes in the agreement. When there is a change in agreement, such lease can still be cancelled. With the permission of the lessor. They can only do that if there is a lessor that is looking at it that this way should be, this way should be. Now, another one is what? With the permission of lessor. If the lessee enter into a new lease for the same or equivalent asset with the same lessor, or upon the payment of lessee of such additional amount that an inception of the lessee, continuation of the lease is reasonably certain. An operating lease, what do you mean by operating lease? All what we have been talking about, found to what finance lease, telling you that it is possible that the lessee will be responsible for all the property and the part of the assets. Now looking at it from the word operating lease, this is the lease other than finance on any finance revenue. This is the difference between the gross investment in the lease and the investment in the lease and the net investment in the lease. That is what we refer to as what? The operating investment. Now, the owner of the property invested in what? In that amount. And the net lease, that is what you earn at the end of the what? At the end of the investment time, that is what you are earning. Then that amount you earn under the operating lease is the amount that the tenant is meant to pay to landlord. If you now remove all expenses from there, then the amount you are collecting or you are getting is what we call net investment in lease. Now, looking at it from what? Another dimension, unguaranteed residual value. This is the portion of the residual value of the lease assets, the realization of which by the lessor is not assured or guaranteed solely by part of the related to lessor. When you look at it, what? The useful life, that is the lease agreement between the parties in which the assets can be used for that particular period. Now let's look at what it's saying now. This is the estimated remaining period for the commencement of the lease term without any limitation by the lease terms over which the economic benefits or service potential embodied in the asset are expected to be consumed by the entity. Now, that is what we're saying here is this: the period in which that particular asset can be used by the lessee. The lessee in this sense is referred to as what? Tenant. That is the number of years that that particular person has rented that apartment or meant to use the apartment or the asset for number of years. That is what we refer to as what? Useful life. Now, we have classes of lease. These are, we have finance lease and we have the operating. Now, looking at it from there, a lease is classified as finance lease if it is transferred substantially all the risk, the reward to the owner. A lease is classified as operating lease if it is not transferable substantially all the risks and liability to the owner. In accordance to the standard, the following In accordance with the standard, the following are the characteristics of finance lease, of which the presence of any or combination would normally lead to lease being classified as finance lease. The lease transfer ownership of the asset to lessee by the end of the lease term, correct? Simply means the ownership of the asset under finance lease is possible at the end of the contract. Lessee has the option to buy the asset at a price that is expected to be sufficient lower than the fair value. That is what you are meant to earn on that asset at that particular period of time will be very, very high. As a result of that, we're told and worked based on experience that the ownership is possible under finance lease to be transferred to the lessee. The risk and maintenance of that will now be maintained by lessee. Now, lessee has the option to purchase the asset at a price that is expected to be sufficiently lower than the fair value. This term is for the major part of the economic life of the asset if there is nothing transferred. Aside that, we also have it clearly here at the inception, the leadership of the at the inception, the lease present value of the minimum lease payment amounted to at least substantially all the fair value of the lease assets. Now, what are we looking at? We are looking at it that we are meant to discount the future value of the lease to know what is the present value of that lease, comparing what all the fair value and what you are earning from that particular asset. Another one, the lease assets are often a specialized nature that only the lease can use them without option. Now, that this asset cannot be easily be replaced by any other asset. That's another aspect you also need to take note. At the inception, of the lease, the present value of the minimum lease payment amounting to at least substantial of all the fair value. Now, what we are saying here is this: when you're looking at the present value, there are some certain amount of money that you are meant to earn on the lease. But because we are looking at it, the present value, what is the amount? That is the net you are meant to realize of that word. After comparing the cost of that lease together with what you are meant to earn on the lease. We said asset cannot be easily replaced. Other indicators that individual or the combination could also lead to lease being classified as finance lease are if the lease can be cancelled, the lessor loss associated with the cancellation are borne by the lessee. Gain or loss from the fluctuation in the fair value of the residual accrued to the lessee. All these are what you need to have idea of. Then the disclosure. What are the things you are meant to disclose when it comes to what? To the lease. Now, in the lease in the statement of financial what? In the financial statement of the lessee under finance lease. At the commencement of this lease term, lessor shall recognize assets acquired under finance lease as the asset and associated lease obligation as liability in their statement of financial position. The asset and liability shall be recognized as the amount equivalent to the fair value of the lease property, or if otherwise, the present value of the minimum lease payment, each determined at the inception of the lease. If this is practicable to determine, if not, the lessor incremental borrowing shall be used. Then when we look at it from the aspect of what? Let's see. In here, now, let's see shall disclose the following for finance lease. One, the class, each class of asset that met carrying amount at the reporting date. The reconciliation between the future minimum lease payments at the reporting date and their present value. Now, another thing we also need to factor in here, in addition, the entity shall disclose the total of the future minimum lease payment at the reporting date and their present value for each of the following, not less than 1 year, later than 1 year, but not later than 5 years. Later than 5 years, all these are meant to be disclosed. Contingency rate recognized as an expense. Contingency rate is only possible under what? Operating what? Yes. The total future minimum sublease payment expected to be received under the cancellation. Then we also have another thing we also need to factor in, the general description of lease material. Leasing arrangements include but not limited to the following: the basis of which contingency rent possible. We also need to disclose that. And what is your contingency lease is all about, and at what time is it possible? And this needs to be disclosed in the statement of financial position. When a lease is meant to be cancelled, you also need to work to state it if it is in the word agreement. The period involving in that words in the agreement also needs to be stated. Later than 1 year, more than 1 year, less than 5 years, or later than 5 years. All these are meant to be disclosed. Basis on which contingency rate is possible, you need to disclose that. You also need to factor in the existence and the term of renewal or purchase option under finance lease. Finance lease has purchase option, that is, the ownership will transfer to the what? To the lessee at the end of the contract. And restriction impossible by what? This agreement, such as this concern with the what? With the return on the net surplus. Return of capital contribution, dividend, additional debt, then further lease. All these are what is meant to be disclosed under finance lease. But when it comes to operating lease, what do we also need to know? Now, lease of payments under operating lease shall be recognized as an expense. The other one, under finance lease, lease payments shall be recognized as what? Capital nature. Needs to be capitalized. Capitalize it under what? Under finance lease. But under the operating lease, it is meant to be what? Expense on a direct what? Straight line basis over the terms, unless otherwise stated. Thematic basis is representative of their terms pattern of the users what benefit. What are the things to be disclosed when it comes to that? The total amount of future minimum lease payments. How much are you meant to pay? Under no cancellation operating lease for each of the what period. That is, there is no cancellation for the lease if it is in the agreement that you are not meant to cancel it until you use the asset to the what to end, such as less than 1 year, later than 1 year, or less than 5 years. All these are meant to be stated in the organizational report, which is statement of financial position under the statement of accounting policy. You need to disclose all this. Now, the next one, the total future minimum sublet payment except to be received under the cancellation possible when there is cancellation. But if there is no cancellation, the just needs to state the amount you are meant to receive in the nearest future. Then lease and sublet payments recognized as an expense. A general description of the lessee's significant leasing arrangements includes but not limited to the following. Basis on which contingency rent payments are determined. That is the base of determining the rent that is meant to be paid as operating lease. Then the extent and the terms of renewal or binding option. But under the operating, there is no buying option under operating. Restriction imposed by the lease arrangement, such as those concerned term of the surplus, return on capital, contribution, dividend, or otherwise. All these are what is meant to be disclosed. Any other question on this? Now, another thing we also need to factor in here is what we refer to as lease and lease back. You can lease a particular property and at the end of the day, you lease it back to another person. Or you bought assets, you sold someone an asset to someone. The person you sold it to now lease it back to you. That is what we call lease back agreement. If a sales and lease back transactions result in finance, any excess of the proceeds over the carried amount shall not be immediately recognized as revenue by the seller. Instead, shall be deferred as deferred income. The amount you are realizing now, and then amount that is sublet will be taken as what deferred income, because it is sublet part of the property that is what subcontract to another person or being sublet to another person or lease back. Now, for operating lease, if the finance was, if the fair value at the time of sales and the lease back is less than the carried amount, a loss equal to the amount of the difference between the carried amount and the fair value shall be recognized as expense immediately. All these are what you also need to factor in this. Now, another aspect that we also meant to use as we are going is what? IPSAS 33. What is that one is all about? Okay, let me just explain that word. IPSAS 33 is not here, but it's part of what we also need to discuss. What is it all about? IPSAS 33 is what? Transition process in the public sector. Transition process in the public sector in the sense that you are converting or you have changed from the accounting basis you are using to another accounting basis. That is, the system is on the basis of what? Cash basis before. You now change from cash basis to accrual basis. When you change from cash basis to accrual basis, you need to look into what we call transition process you are meant to follow. Or the first time of adopting what? IPSAS. First time of adopting IPSAS. Now, what are the things you also now need to look into? That is what we call transition process, which is in line with what IPSAS 33. Now, what do we need to have idea of when it comes to this? One, we need to identify what is the accounting year of that particular company. Accounting year of that particular what company or that particular organization. After identifying the accounting year of the organization, we need to look at what basis is the organization using to prepare the financial report. Is it cash basis? Is it accrual basis? If it is cash basis and they want to change to accrual basis, then we need to identify what is the accounting period, accounting year. We need to look into it. Then prior year adjustment. We also need to consider the prior year adjustment. After considering the prior year adjustment, then the next thing we need to prepare what? Journal to take care of the adjustment of the asset and liability. After taking care of the adjustment of asset and liability, we now prepare statement of financial position, which we call statement of what? Operating what? Opening statement of affairs for the first time of the organization. Opening statement of affairs for the first time that particular organization is adopting the new accounting system. These are the summary part of what the IPSAS 33 also, which I'm going to forward to you after the class. Now, we now need to look at it. How do we go with journal? What type of journal are we meant to prepare? The journal you are meant to prepare is referred to as the journal you are preparing under this one is not the same thing as what sales journal or purchases journal, returning what return. You are meant to prepare what we call the journal proper or general journal. On that note, you are also meant to give us the narration of why those adjustments are being put in place. This is in line with what we refer to as what IPSAS 33. Then we now need to go back. Since we've discussed all the IPSAS that we need to be able to handle the issue relating to that parastatus, let's go back to that parastatus and adjust what we need to adjust before we not look at the computation under that part. Now, what do we mean by parastatus? Parastatus and public enterprise. These are organizations put in place by the government to assist the ministry. Let's go there. I'm coming on. Have you been taught transcript? Hello? Hello? Hello, class?
I don't think so.
Has Mr. Idris discussed transcript with you?
I don't think so.
Okay, no problem. Now, let's look into that parastatals. Now, that's topic 12. Government parastatals and public enterprise accounting. What do you mean by public parastatals and public companies? Are agencies established by government for specific purpose. For example, corporations, boards, and public companies. The characteristics of all these: corporations are special organizations set up by government with the aim of carrying out certain projects or performing beneficial service to the nation. Examples are River Basin Authority, which was set up to harness the agreed benefits of the river basin. The National Electric Power Authority, now known as Power Holding Company, for the generation and supply of electricity, is different from the Ministry of what? Power. Then, all these are organizations put in place by the government in order to help to assist the ministry to achieve their aims and objectives. Now, that is the first phase. Now, the corporations or parastatals has its own enabling law. We call it what? The law, which is what refers as what? The bylaw. This law set up and we show the details as follows: the names of the organization, the names of the corporation, its functions, the principal officer of the board, their functions and other appointments, supervising ministry, that is which ministry is meant to report to, the place where the head office and branch of the parastatal will be cited, the organogram of the organization. What do you mean by that organogram? That is what? The hierarchy of the organization in terms of what? How the power is meant to be distributed. The sources of finance of that parastatals or the public enterprise will also be stated. The types of accounts that they are meant to what? To keep. All these are what they are meant to look into. Parastatals and corporations are usually not governed by the provision of the Company Act. No. Hence, corporations' name will not end with what? The word limited or public limited. No. Because they are operating under the government. Now, state and federal are free to set up their own corporations after due process. Such parastatals, board, or corporation are quite different from the ministry. They are not ministry. Now, extra-ministerial departments have the same accounting system, unlike the board and the corporations. Government regulations which help the ministry not to apply to the government agency, they are different. Then, we also have what we call all corporations have supervising ministry. That is, they have the ministry they are what they are meant to report to. The regulation passed by corporations called the bylaw. That is, the law governing the corporations under the government is called bylaw, which I've made mention of it. Then we also have it as well. Supervising ministry and government approval approve the following for a corporation before they become what? Operative. One, increase in the price of goods or services delivered. All the law, all the bylaw they are meant to apply, they need to look into that. Corporation annual budget, they will need to look into that. Any major foreign agreement, government will look into that. Now, sources of what? Income of the parastatals. What are the sources of income? All corporations are set up mainly to render social service to the public at the least possible cost and principally self-finance. The appropriate government makes funds available to them in forms of subvention. That is, the money that is meant to be given by the government to this organization is referred as what? Subventions and what? Grants. The money given to the corporation by the government is income to the corporation and is usually classified as current or capital grant or subvention. Any money given by the government to this particular organization refers to what? Subvention or capital grant, depending or recurrent grant, depending the purpose of that grant or that particular subvention. Now, looking at it from the expenditure end, what are the things to be looked into when it comes to the expenditure part? All corporations incur expenses such as payment for staff salary, maintenance of facilities, expenditure incur either revenue or capital in nature. Then most corporations depreciate their assets using appropriate policy based on the approval from the Accountant General of the Federation, because it's also served there as what as a guide to them. The main objective of setting up corporation and is what I wrote. One, to bring the mean of the production under the public ownership, to avoid high prices of goods normally charged by the private sector, to avoid duplication of what? Facilities. All these are the reasons for public corporations or parastatals. Any question on this part? Now, these are the questions under this part that has been tested so far. One is being tested under what? Power, under the electricity. Other one being tested under what? University. They build what? Distribution. Then the second question here was tested as what? University. That one relates to education. Any question, please? Now, look at that question one. We now relate it to those words, IPSAS we have discussed to prepare the account. Can we look at it together? We still have about something. Hello, Gloria. Olajide. We are the major.
Yes, sir.
Now, look at question one. Do you have idea of what that question is all about before we work things out on it? I will still need to discuss something relating to last diet question on this. Maybe that might be in our next class because of the time factor. Now, let's go. Let's look at Excel. You have this question with you now. Do you have it? You can be calling with them for me one after the other. Let me open it. Now, let's look at the question. What do they say we should do? Do we have an idea of what is it all about? We are told here that question one, the following information has been extracted from the book of Dave Bridge Power Distribution Board. This is a board which is one of the words public parastatals for the year ended 31st December. Accumulated depreciation were given. Sales of electricity, purchase of electricity, We also have what? Meter reading bill, and collection of electricity, that's an expense. Non-current asset expenditure, that's non-current asset. Then debtors for, that is receivable. Training and welfare, that's an expense. Stock and work in progress, that's inventory. Rent rate and insurance, that's an expense. Electricity estimate on rate consumption is a non-current asset. We have administration and general expenses, that's an expense. We also have it as electricity council grants, that's an income. Then preparation of electricity council expenses, that's an expense. Then bank balance and cash, we have depreciation for the year. We also have higher purchase and deferred income installation not yet due. Then interest and finance expenses. We also have creditors and accrued liability. We have profit on contracting and sales of appliances sold. That's other income. We have reserve. We have rentals of meter applications. We also have distribution costs, customer service costs. Now say you are further informed that depreciation for the year were this. We're also giving already. We now say that required, prepare in vertical form statement of financial performance and statement of financial position for day wage for 31st December 2008. How do we go from there? How do we go from there? Hello? Olajide? Gloria?
I'm trying to open the question from my end.
Oh yeah, let's open it.
The question is on page 78.
What do you say?
Thanks, Olajide.
Let's now look at the question. What's the name of the organization?
Bridge Power Distribution.
Okay. Now let's go. Day Bridge
Power Distribution Board.
Yeah, Power Distribution Board. Okay. What was the A part of the question say we should do? Statement of financial performance for the year ended. (31st December 2008. Do you have the question in thousand? Okay. Should be in thousand. Yes. Now, what do we have? Now, be reading the question one after the other. Let's go. We can look at it as what? The income. What are the words? Income in the question there. Hello?
Yes.
The income. What make up the income? We have what we call sales of electricity, sales. Sales of electricity. How much is that?
114,392.
114.
392.
392. What are the other ones? What are the other related incomes? Now, we can do it in such a way that we categorize all the expenses together, all the incomes together, then we determine the surplus or deficit. No problem. And if you want to generate it in such a way that you want to look at expenditure relating to direct expenses, no problem. Now, looking at it this way, what are the other related income in the question? Purchases of electricity and expenses is an expenditure, which will give us the gross income. Do you understand? Meter reading and these are an expenses. Then training is an expenses. Asset is that's an asset. We're going to recognize that's an asset there. Debtors of receivables. Then we have electricity estimate on rate consumption, an asset. Administrative, that's an expenses. Then electricity council grant, that's an income. Electricity, can you see it? Electricity
Yes,
council, can you see it?
Yes, sir. Yes, sir. 21,556. It's 1,556.
I can't hear you.
21,556.
Yes, 21,556, Abi.
Yes, sir.
Now, after that, we have the depreciation, higher purchases and assets, interest and financing costs, that's an expense, financial expenses. We also have what we call profit on contracting and sales of what? That one is what? It's also an income. Can you call that figure for me?
534.
Profit.
534.
I'm coming. Profit on what? On contracting.
And sale of appliances for.
Contracting and what?
And sales of appliance code account.
Sales of appliances. Appliances. Full, Abi?
Yes, sir. Code account.
How much is the figure?
534.
534. This is reserve. Rental of meter application. That's also an income. Rentals of meter application.
556.
How much?
556.
556. What else again? Distribution cost, customer service. Those are the income we have as that question is concerned. What is the total? This is the total. This is got as total income. Then what are the expenditure? Now, let's look at it together. What are the expenditure?
Purchase of electricity.
Purchase of electricity. Purchase of electricity. How much?
95784.
95
784.
784. Then the next one is what?
Meter reading.
Expenses. Meter reading. Meter reading bill collection electricity. Meter reading bills and collection of electricity. How much is that?
1624.
Ma?
1624. 1624.
1624. Okay. Then non-current asset expenditure, that one is an asset. Then the next one is training and welfare. Training and welfare. How much is that?
692.
26.
692.
That thing is weak. I can't hear you clearly.
692. I'm actually in a noisy place. I don't know if I'm right.
692. Is it correct?
Yes, sir.
The next one. Now, let's look at this. We have what?
Rent, rate, and insurance.
Yeah, rent, and insurance, yes. Rent, rates, and insurance.
2126. 2126.
2126.
26.
Okay. The next one. Administration and general. Administration. How much is that?
1476.
1476. Is it correct?
Yes, sir.
1476. The next one.
Preparation of electricity council.
Preparation
Of electricity council's expenses.
Electricity council grants. How much is that?
Expenses. 362.
What do you say?
Preparation of electricity council expenses, not grant.
What do you call the figure? I can't hear you clearly. That thing is breaking.
362.
Preparation of electricity council grants.
362. It's council expenses.
Preparation of electricity council expenses, not grants. Don't get it. Preparation of electricity council's expenses. That electricity council grant is an income. Council's electricity expenses.
Okay. 362.
What do you call the figure?
362.
362.
Depreciation for the year.
Depreciation for the year. How much is that?
3634. 3634.
2834. Is it correct?
Yes, sir. 3634.
Okay, 3634.
Yes, sir.
3634. What else again?
Interest and financing expenses.
Insurance. Interest
And financing expenses.
and financing
Expenses.
how much is that?
2434.
2434.
Yes,
Abi?
sir. Yes, sir.
Okay. What else you can
Distribution cost.
Distribution cost. How much is distribution cost?
12476.
What is it?
12476.
4476. 4476. Followed by
Customer service.
customers service. How much is that?
1810.
Any other one? Nothing. Is that all?
Yes, sir.
Now we need to look at the total of this one also. What do we call this? The difference between the total income and total expenditure. Call it surplus. Is it clear? Is it clear? Now need to be part of the question. Say we should prepare what? Statements of financial
Financial position.
for the year ended. I'm sorry. As at 31st December 2008. Now we have assets. Under that asset, we have non-current assets. This one we have first accumulated depreciation. Net book value / carried amount. Now, let's go back to the statement of, that extraction they gave to us here. We have non-current asset expenditure. Is that not so?
Yes, sir.
Yeah, that non-current asset expenditure is coming non-current asset expenditure. How much is the figure?
84102.
What is it?
84102. 84102.
84102. Okay. Is it 108 or 8410?
102.
Okay. Now, accumulated depreciation and depreciation for the period. The total of the two is, what is accumulated depreciation? Given to you in the question. Accumulated depreciation, they gave it to us. Accumulated depreciation as at 1/1/20, that's the beginning of the year. That's how much? 45,224.
Yes, sir.
Yeah, 45,224 plus what is the current year depreciation?
3634. 634.
3634, I mean.
Sir.
Now, when we now place that from D, we have E minus this. We have this. Now, this is it. Any other information regards to that? Do we still have any other assets in the question?
No,
Now, we close this. Current assets. What do we have?
debtors for electricity consumption rate. Debtors for electricity consumption rate.
Let's start from, okay, meter reading and others and expenses. Then debtors for electricity consumption, electricity read in the year and other sales. Debtors. But prior to that, do we have stock? We have stock and work in progress. That one should come first based on the arrangement. Is it clear?
Yes, sir.
Yeah. We have stock and what? Work in progress. Work in progress. How much is that?
1, 2, 3, 4.
1, 2, 3. Then after that, we also have debtors for electricity consumption grid. Debtors. Electricity consumption How much is that?
12,006. 12,006.
4006, Abi?
12. Not 12,006.
Do you say 12?
Yes, sir. 12,006.
Okay. 12,006. Okay. The next one. Then after that, if you look at it again, debtors, we have picked that, we have picked this, we have picked that. We also have electricity estimated on rent consumption. That one is also an asset. Electricity estimation
Estimated on record.
consumption. How much is that?
7222.
722. Okay. Then after that,
And
we
bank
have
balance and cash.
what say? We have
Bank
we
balance.
have bank balance and cash. Yes. Bank balance and cash. How much is that?
1284.
One what?
1284.
1284. We also have higher purchase and payment installation not yet due. Higher purchase and deferred installation not yet due.
2672.
22.
2672. 2672.
Okay.
Yes, sir. 2672.
2672. The next one.
Yes, sir.
So that you capture that.
Reserve.
Nothing more. Then we look at the total of this. This is referred to as total assets. Total assets. Now let's look at it from the liabilities end. Now we have funds and reserve. Funds and reserves. Now, what are the funds we have in there? Any fund? Do we have any fund? Question. Is there a fund? Since we only have what? Reserve, Abi?
Yes, sir.
Now, reserve. What do we have as reserve?
23116.
2.
3116.
1 what? 6.
Yes.
Okay. What about surplus? Our surplus is what? This is our surplus. to capture this. This is what we have here. Okay. Do we have non-current liability? What are the non-current liability? Eh? Non-current liability, what do we have? Do we have anything like loan in the question? Not at all, Abi. We don't have, Abi.
Yes, we don't have. We only have higher purchase.
That higher purchase is what? Unread consumption is an asset. We have captured it already. It's not that they are the one that they install a meter for people and they have not paid yet. They are paying on higher purchase. That's why it is an asset to them, liability to those who are owing them. Now, then current liability.
Yeah, creditors and accrued liabilities.
How much is the current liability? What are the current liability items we have? We have creditors and accrued liability. How much is that? Creditors
13,926.
and accrued
Accrued
liability.
13,926.
Huh?
13,926.
13
926.
926. Okay. Any other one?
Yes.
Any other liability in the question? Not at all.
Yes,
Let's
sir.
check. Now, this plus this. That's our total liability. Total liabilities. Then we now add it with this. Does it balance?
Yes, sir.
That is that
Yes, sir.
Another question. Any question, please? Absent of no question, we can look at it from what? Second question too. But you have class after my class, Abi? Hello?
Yes, sir. I don't think so, sir. I think our IPAS they shifted to tomorrow.
Tomorrow, Abi? Yeah, but we haven't got in the next 5 to 10 minutes now. But we still have 2 questions to look into under this part in our next class. Then after this topic, we are moving to finance, which is accounting interpretation and what do you call it? Capital expenditure, investment appraisal. Then you can say that we are running towards the end of our, from my own end. Then what are the topics Mr. Idris has discussed with you, and what are the topics that are yet to be discussed with you? Review the area that is meant to discuss. Let me know the area you have discussed and the one you have not covered. Do you understand?
Okay, sir.
Now, I will send this one to you, but we are still meant last diet. Question number 1 that came out last diet, we are looking at it next week. And at the same time, question number 2 here, we are going to look at it that next week. We pray that God should keep us alive to that next week. Is that clear?
Yes, sir.
Welcome. The reason why I did not want to discuss the second part and that one is because this one is more lengthy and it requires more attention. And most of you were not part of the group as of today. Please discuss with them that our next class is going to be more words expanding than this, and all of you need to be on board. We don't know, because most of the people complain of that number 1 last diet, possibility of facing similar question. This diet is also very high. That's why I'm deliberately keeping this one aside. Okay, thank you.